And the stocks that are gaining from the front are IT names. So Mastek's commentary was important where they see deal momentum picking up, and that's given a fillip to some of these IT stocks. So there you have it. The first tick on the index in flat terrain. The Nifty holding on to 19,360. The Bank Nifty actually a tad bit in the red. So it's flat, but with a bit of a negative bias going for itself. Let's find out what's dragging the markets. As I said, Adani Group stocks not looking that great. Adani Enterprises and Ports down about 2.5%. Bharti Airtel in the red as well. It's banks yet again. This month, the banks are down over 3%. And that trend continues. So Axis, HDFC, Kotak are all in the red this morning. Apart from that, some steel stocks also not looking great. JSW Steel down about 1%. You have Cipla, Sun Pharma, Eicher Motors also trending in the red this morning. So what's doing well? IT, you have HCL Tech, you have Infosys, there is L&T, which of course has been a big gainer this year. There's TCS, SBI that are hanging on to the green line, and Hindalco is up almost about 1%. Tata Motors as well, not too bad really. Still one of the biggest gainers this year, up about 60%. So Tata Motors hanging on to that 600 rupee mark. But otherwise, the action once again continues in the broader markets. But, now all Adani Group stocks are under a bit of pressure. So there's Adani Gas, Adani Enterprises, a couple of others as well, down about 2 to 3%. What's happening in the broader market?
Well, on the Adani Group itself, the group has sent out, a release. They're rejecting all of these claims that have come overnight. So, those stocks should be in focus. They're under some pressure, but the Adani Group is rejecting all of these claims. Two stocks that we were looking at on the back of large trades, MedPlus as well as Sula. Both of them at a bit of a discount. Those deals are getting cleared out as it's flashing for you on the screen. So both of them on your radar. On the flip side, Jio Financial Services, it's locked up in upper circuit again. It's up close to around 5% approximately. Remember, it continues to remain in the Nifty because it needs 2 days of not hitting circuit, either on the upside or the downside. And that's not happened. So still, it is giving some kind of support to the index. Suzlon, well, that continues to move from strength to strength. That one, in fact, is up close to around 4.5%. And for this month itself, Suzlon is up close to around 40%. So that's been one of the big outperformers. Uflex had a good session yesterday. It's continuing its good run. It's up close to around 3.5% as we speak. On the downside, a couple of other notable movers are, ACC and Ambuja Cements, both of them belonging to the Adani Group. So both of them are down 1.5% to 2%. And from the frontline names, Hindustan Copper is up close to around 3% odd. Last quarter's numbers weren't great. Valuations not in favor. But the street seems to be thinking that there's a bigger game that will play out here. And maybe, in fact, they'll be able to change their product mix, get some kind of value-added, products coming in there as well. So explains why that stock is up 3%. Prashant.
Okay, those large blocks are going through, right? MedPlus is flashing at the bottom of the screen. Sula, there's that 13% equity has changed hands. The stock's holding. I mean, with that kind of equity hitting via these deals, I mean, the stock's down 3, nothing. MedPlus is down about 5%, a little more, and there also it's a very large transaction which has taken place. Now, let's just take a quick look at a few other names. Geo Financial, I think Nigel did highlight, 5% higher. So, yeah. The low was 200, almost actually 202 or so was the low 2 or 3 days back, and it's rallied nicely from there. Look at just a few other names, right? Shakti Pumps was locked up in 20% circuit. It's up another 5% this morning. So it's coming up as the 4th largest volume traded stock. So that's pretty large for this time of the day. We have Uflex, which went up sharply. All these packaging companies, Uflex was the top gainer. It's up another 3% this morning. Atul Auto, what a move. I mean, we had the largest investor in Atul Auto, Vijay Kedia, with us earlier this week. From that point, the stocks rallied another 25%. But the rally started before that. The stock is up 70% in August. 70%. So it's been just a one-way kind of a move for that one. We've got MTAR Tech, which is up about 4%. Stocks at about 23.76. MTAR Tech, large volumes in that one. Ajanta Pharma is up about 3.5% right now. What else? Kirloskar Oil Engines is up about 5%, 489 on that one. There is Chennai Petro, which is up 2%. Dream Folks, there was some news flow there earlier. We picked up 3% on that one, 515. Supreme Industries, look at that. Oh boy, almost 4,700 on Supreme Industries. That surprise MSCI inclusion happened not very far back. and it's been an absolutely stellar move. 30% in August. So Supreme Industries has picked up trades at I think about 60-65 times 1 year forward earnings, but no stopping it really at this point in time. And I just want to quickly look at Gokuldas Exports, which did very well, and I think it's seeing a little bit of profit booking. It's down about 4.5%, 828. I mean, almost went to 900 from under 700, 2 days flat. So there is a little bit of pullback, which is materializing on that side. Apart from that, as Sonia mentioned, some of these Adani Group stocks, not large, they're down 1.5%, at least as we begin today's trading session. Manishi Ray Chaudhary is with us. He's Asian equity strategist, Equity Cash Asia Pacific at BNP Paribas. Manishi, good to have you with us here. Thank you. So, what are the themes that you guys at BNP are working on? We had Harold, who writes the Flying Dutchman column at HSBC earlier with us in the morning, and we were talking about small caps and mid caps, and he was saying, well, large investors that he speaks to are still looking at large caps. I mean, smaller down the market cap, especially the small caps and mid caps, etc., not so much. Is that true in your case at BNP as well? Have you expanded your coverage universe, and what are you really picking up? Go on.
I would tend to agree with that, because large investors who invest very large quantum of money, they would look for liquidity, they would look for size, and that naturally makes them gravitate towards the frontline large cap stocks in most markets. Now, fortunately, over the last 5 to 7 years, that universe of large liquid stocks have considerably expanded in India. If you go back 10 years, possibly at most about 30 to 50 stocks would fit the bill. But today, an average of, let's say, $5 to $10 million of average daily trading volume would pertain to at least about 150 stocks. So that expansion of that universe itself has made the market more attractive. Now, this is, of course, the story in many Asian markets, even in China. But in India, a combination of expansion of the addressable market with significant support from the domestic flows, which makes the market more stable, that has clearly been a very strong tailwind.
Manishi, hi, good morning. How are you feeling about the mid-caps now? Because the rally in the mid-cap index has been steep, but the quality of stocks is a bit questionable at this point in time. Do you think there's a little bit of a euphoria in the mid-cap space that one should be cautious about, or is there more to go on the upside?
Well, I think just like in any category of stocks, not just mid caps or small caps, one has to be selective. And the investment philosophy should be to try to buy at a reasonable price and at the same time look for growth opportunities and good management quality. If I look at the headline valuations, mid cap and small caps after this stupendous rally that we have seen, they are trading at at par with the large cap valuations, and in some cases even more. So the headline valuations do give us some degree of lack of comfort about that space. And I would think, therefore, that possibly the large cap frontline, well-researched stocks, where there's a degree of knowledge among the analyst and investor community, they provide a degree of comfort at this point of time, which the relatively unknown mid caps and small caps may not.
All right. Hi, Manishi. Good morning. What's really done well in this past month or so is IT. You're talking about the Nifty being range bound. Well, that index itself is up by more than 4%. What's your take on the index? Because there are headwinds up ahead, but it seems one part of the street believes that maybe on data, on software, India is going to continue to outperform, and that's some part where China can't really give us any competition. Your view on the space?
Right. So, you would recall that when I was here on your channel, that was possibly a month ago, and even earlier, I had talked about IT, and we had sounded out that we were actually positive on the sector, despite all the negative data points that had been coming in, particularly around April and May. That was when some of the large cap frontline stocks had given profit warnings. They had talked about slowdown or ramp down in some of their client activity. But we had always held to this point of view that one should be selective in this sector and look for those companies which have a strong deal flow pipeline. And there are quite a few of them. So we actually stick to that point of view. We think that the deal flow in the traditional business, and there are sort of two kinds of deals, where the usual, or the new projects in the Western Hemisphere are possibly going a bit slow right now. But the kind of projects which actually lead to significant cost reduction in, let's say, the banking space or the retail space, they are still very much alive. And that's why we still have IT service stocks in our Asian model portfolio in the India sliver. And we see no reason to get out of those at this point of time.
Right. Got it. Manisha, are you watching the the monsoon situation at all? I mean, will that emerge as a risk to consumption? So the latest data says that the monsoon season, which is from the 1st of June, runs till the end of September. But as of now, from the 1st of June, as of yesterday, all India deficit is 9%. 10% qualifies to be called, over 10% qualifies to be called a drought. Of course, I mean, it's the government's it's other factors as well. It doesn't have to be, but over 10% can be. And August has been extremely severe in some states, the deficiency. Maharashtra, for example, I think deficiency in August was almost 60%. So your thoughts in terms of how that kind of plays into the near to medium term. Go on.
This is undoubtedly a near-term concern, as far as the consumer sector and more specifically food price inflation is concerned. But of course, even this monsoon situation has to be triangulated. As we know that June was a small deficit, July was excess, and August has turned out to be quite a significant deficit all over India. And of course, there is a difference across different regions. As we know that, I think there's a deficit in eastern and western part of India. The silver lining here is that much of the sowing actually happens in July. And there was a significant excess rainfall during that period, which would have also led to groundwater availability being at a relatively comfortable level. Now, having said this, I must point out that this is clearly a significant near-term headwind that we are watching out for. We don't think, even if we do have a degree of food price inflation in the fourth quarter or beyond, it would lead to any significant change in the domestic monetary policy. But it is something that clearly has to be looked at as a near-term headwind to the market.
Okay. I had one question on this, sort of consensus buy trade on the capital goods and the power names, right? We were just having a discussion with the power analyst who said that this thermal space is really booming now. Order wins are coming in thick and fast. So the NTPCs, BHELs of the world, are you bullish here? And from a long-term investor perspective, I mean, it hasn't been great for long-term investors in the past 10 years for these sectors. But now do you think things are going to change?
In general, we are positive on industrials. And we think that, yes, power equipment being an integral part of that would also benefit. But one has to be careful about the receivables of some of these companies. Many of them deal with, government orders in a big way. But, if you look at the Indian earnings estimate environment, it has actually increased over the last 1 and 3 months. And one important contributor to that has been the industrial sector. Now, within industrials, there are 2 or 3 areas that we tend to focus on. One, infrastructure, where government infrastructure investments are increasing and shall continue to increase, we believe. Second, defense equipment, and that's clearly one area which has been growing and possibly holds furthermore hope for the future. So this is in a sense what we are trying to focus on. I mean, no doubt industrials are a great space right now. We think there's a private capex cycle likely to ensue maybe 6 months to a year down the line. But again, one has to be selective about focusing on the right segment within industrials and getting the stocks at the right growth adjusted valuations.
All right, Manishi, thanks so much for stopping by and filling us in with all of those details. Wishing you a good day ahead and looking forward to have a chat with you rather soon. Well, let's turn our attention to the chemical space. Well, most chemical companies have seen an uptick in stock prices of the last few days. That's been driven by increasing in pricing of key chemicals and expectations that Chinese demand is recovering. To help us analyze what's going on ground, Mr. Rajinder Gogri, the chairman and managing director at Aarti Industries, joins us on the show. Hi, Mr. Gogri. Good morning. Thanks so much for joining in. Well, Mr. Gogri, you tell us, what is your reading? There has been a big surge in chemical prices, but we understand it's not really backed by demand. Is it because input costs have gone up? How do you see this playing out?
Yeah, I think overall demands have now shown increase. So I think from this second quarter onwards, we see the higher volume for most of the discretionary products. And I think agrochemical also segment also the volumes are now looking up for the sector.
So, Mr. Gogri is saying that demand has increased in the month of August itself in comparison to what you saw, say, in the previous month or the previous quarter?
Yeah, overall, I think demand has recovered.
Okay.
August onwards, but different products, there will be a different cycle. But in general, I think overall there is an increase.
Okay.
What does that mean, Mr. Gogri? Could you quantify that? To give us some extent, has it improved by, 10%, 15%, 20%? When you say it has improved, what's the degree of improvement?
Yeah, it will be ranging of about 10%, on an average, you can say that, those kind of increase should be there in this quarter.
So demand in Q2 has gone up by about 10% on an average across products.
Yes.
Okay, that's interesting. What about prices? There's been a big surge in chemical prices as well. What is the situation right now compared to what it was, say, a few months ago?
Prices generally, we have a pass-through model. So, all the raw material prices generally pass through. So, I think the volumes are more critical for us in general.
Okay. So if prices are a pass-through and volumes are more critical, can you tell us what is the kind of, since demand has picked up, what is the kind of growth that you are looking at in FY24 compared to what you've seen in FY23? Both on the volume and top line front?
Yeah, you see, the first quarter was, quite impacted for entire chemical industry in general, not only in India and globally. So we had a degrowth of almost 30% YOY in the Q1. So we see that, Q2 onwards, positive growth over Q1. And overall, I think this year, we'll see that try to hit the previous year number.
Okay.
As far as EBITDA is concerned.
Okay, so top line will be more or less flattish at around 6,600 crores odd.
Yeah, top line is more function of the raw material prices.
Got it.
Yeah.
What about the EBITDA number, Mr. Gogri? For the next year, that's for 2025, you're looking at taking the EBITDA number to around 1,700 crores. But in FY24, what will it likely to be?
Yeah, FY24 still, how the entire this demand growth curve moves up in second, third, fourth quarter. So that will be the determining factor. So
Okay.
more or less, we try to be more flattish on that. Substantial growth should come up in FY25.
Okay, and what is the margin band we should look at then? The first quarter you've done margins of close to around 14% or 14.2%. You expect margins to improve from here on?
Yeah, I think margin as a percentage generally, again, based on raw material prices. So we generally don't track much on the margin front overall.
Okay, got it. Mr. Gogri, sorry, just to rewind, you said Q2 volume should be better than Q1. And that 10% increase in volumes that you've, the average increase, that's Q2 volume should be about 10% higher, Y on Y, right? That's the way to look at it?
Yeah, QOQ, it will be more of over a Q1 number.
Okay, so Q2 volume should be about 10% higher, Q on Q.
Yes.
Okay. Just a quick word on the discretionary segment, which is about, I think, 50% of your overall revenues. could you, and you started by saying that you're seeing some better demand for those products. Can you give us some more color? Do you expect it to hold? What has led to this increase in demand revival? Any specific one-off factors or anything of that sort? Or is this going to be on a repair kind of trajectory? Will get better and better? Go on.
So basically, this was mainly some demand slowdown as well as inventory correction because of the global interest rate increase. And previous year, there was some accumulation of inventory, so which correction is taking place. So once the inventory correction from product to product gets over, we are seeing the growth in this demand for discretionary products.
How, when will this inventory complete rundown happen? I mean, your best estimate?
I think by Q4 we should be near normal by Q4 for most of the products.
Okay, and this is a global kind of a sort of view, right? I mean, it's global increase has been high. So
it's a
March
global
of 20, Sorry, go on.
Because we have direct and indirect also export, like some of our product are then subsequently exported. So this is a global inventory correction mainly because of the US interest rate. Interest rate in dollar terms have increased.
Okay. I wanted to talk a little bit about the balance sheet as well. You're sitting on around 2,600 crores of debt. Do you have any plans to bring it down?
No, we are continuing with our investments about 2,500 to 3,000 crores in FY24 and 25. So we'll see some increase in debt further, and then afterwards, I think it will start flattening and coming down.
So how much will your debt go up by, say, in the next 12 to 18 months?
Yeah, it will be upward of 3,000.
Upward of 3,000 crores. Okay. You have some capex as well, right, in some of the new products and the existing products as well. Can you tell us what is the total capex plan over the next 12 months?
Yeah, this FY24 and 25 combined around 2,500 to 3,000 crore is the capex. What we are
okay.
All right. Mr. Gogri, what was about your capacity utilization level? I think it was much lower in Q1. If things have improved, what are you functioning at currently, and do you see that improving?
Yeah, well, as I mentioned, about 10% in overall volume increase, and I think.
But as a percentage, utilization levels, in comparison to what you can normally do?
Actually, we have been adding capacity. Our nitrochlorobenzene capacity also expanded in month of July. So it will be difficult to give a specific percentage because we have a very wide product range.
Okay. Got it. Sir, just one last question. What Sonia said about capex, and you gave us that number over FY24-25. No reconsideration, right? All of this is committed kind of capex, and this is in a way already work in progress.
Yes, because the long-term, India story is we are very confident that, there is a demand appetite from India. And a lot of these products are both import substitute as well as for export market, and they are growing in both agro and pharma. So we are very confident as far as the long-term demand from India.
Okay. This inventory build-up and then slow correction of those inventories, drawdown of those inventories, you would have seen in earlier years as well. Right now, you're telling us that it should be normal, inventory across the board should be normal by fourth quarter, by the end of the fourth quarter. What happens after that when inventory is normalized? I mean, what have you seen in previous cycles, sir?
So then, it will be more from the end consumer demand, so that will be of reach to that level, like agrochemicals would more or less become normal. And on discretionary also, I think the end consumer demand also should get more or less normalized. I think US interest rate also should peak in this financial year. The interest rate also maybe should start tapering off in FY25. So I think FY25 should become more or less normal.
Okay. Just one final question from my end. This Dicamba product, there was some contract cancellation that you went through, so that became a bit troublesome for the company. But can you tell us what is the outlook now? How much money have you put into this already? And what are the strategies to revive this plant?
Actually, that product demand is still an issue. So we are just looking at, next couple of quarters, we'll see, how much we'll be able to utilize that plant, or we should repurpose that plant for something else. So that is under evaluation right now.
Well, what about the deficit in monsoon out here? Isn't it going to hurt you?
Actually, most of our agrochemical segment is more for global markets. So Indian monsoon is not going to be much impact for us.
Okay, great. Thanks for clearing the air, sir, on that. And good to hear that at least demand is improving. We were wondering whether or not, we had an IFL analyst who told us that maybe demand is not that strong. We'll have to wait for clarity on that. But as per you, as you're telling us, that if volumes have improved by 10% on a quarter-to-quarter basis, that's definitely good news. Thanks so much, Mr. Gogri, for stopping by and giving us all of those details. Well, time to slip into a short break. On the other side, we'll be joined by Vivek Lohia, the MD of Jupiter Wagons, to discuss the company's business outlook, as well as they have some fundraising plans. Later on, we'll connect with Lalit Agarwal, the founder and managing director at V-Mart Retail. Stay with us.
Welcome back to Bazaar Morning Call. Very interesting company now on our radar, Jupiter Wagons. If you just pull up the stock, just look at the phenomenal move the stock has seen. This year itself, the stock has jumped over 270%. And is the stock performance led by a financial performance, or is there something else? The company also plans to raise equity funds. To understand more about the business prospects and the need for additional funds, we're joined by Vivek Lohia, the MD at Jupiter Wagons Group. Vivek, thanks a lot for joining in. And I'm sure you are as perplexed as investors to see the kind of move that the stock has seen in the recent past. So I just want to understand from you, in the last 2 to 3 years, has there been any change in your business drastically that has led to this kind of an up move? And what are the businesses that you are in currently? How do you compare yourself with peers like, say, a Titagar or a Texmaco?
Yeah, good morning. So definitely, this sector has been going through a huge tailwind, and we had seen it coming. So since this government has come to power, they were very focused on this sector, especially given the high logistics costs which the country currently has. We are typically, our logistics cost is close to 13%. And if we are going to be competitive globally, we need to bring it down considerably. And railway being the key driver, I think, towards this. So we were seeing a lot of investments in this sector, which was not visible, obviously, in the public domain. And which recently, you're now seeing I would say, the offshoots of that. So we are a wagon manufacturing company, and wagon procurement is the last mile of the whole chain. So initially you have to set up the infrastructure, which I think the government has been doing a phenomenal job.
Got it. So can you put some numbers to this for us? The last time, the last I checked, you had an order of, you won orders of over 2,100 freight wagons worth 1,060 crores in Q1. What does it take your total order book to? And how much will you be executing, say, in the next 12 to 18 months?
So currently our order book is about 6,000 crores plus. So in terms of order books, we don't see any challenges because we are constantly adding new order books, both on the private sector itself. And now government has, what we can understand, has got big plans to procure further rolling stock. Anything between 40 to 55,000 is a number which we are aware of, and which is going to happen very shortly. So there is a lot of opportunity in this sector, and the private demand is also very strong. In terms of execution, currently we are doing about close to 600 wagons a month, And our target is by end of this year, we are increasing our capacity to about 800, and we are doing substantial capex towards that, both on the wagon manufacturing as well as on the backward side of it. In terms of our foundry capacity, we are looking now on seriously to set up a wheel manufacturing facility with one of our global partners. So the idea is that by next year we should be in a position to manufacture about close to 1,000 wagons a month.
Okay, all right. Hi, Vivek. Big stock move is what you have seen, but that's what makes things even more interesting, right? Maybe the street knows something that we don't. So let's get some more clarity. You said your order book is around 6,000 crores. Break it up for us. How much of it is private? How much of it is from the Indian Railways?
So currently, most of our order book is private. I would say about close
Okay.
to 6% plus of the order book is private.
60%.
And over the last
60%.
1 year, that has been our focus. Because we saw a lot of opportunity in this space. Earlier,
Okay.
the private participation was much less, which is now growing considerably. And
Okay.
we are the front runners, I would say, in the private space.
Got it. All right. Let's get a few more details. You want to raise some money, right? Why do you want to do that? What's the quantum you're looking at? And could you tell us what is the need to raise money as of now? Because I'm looking at your interest payment is what, some 30 crores in the full financial year. So why do you require it?
Yeah. So as a company, we are a net debt-free company. So
Okay.
again, but then as I've told you, there's a lot of opportunity in the sector, and it's not that one is a core wagon manufacturing. Otherwise,
Okay.
we are also involved. We also have invested a lot in manufacturing of the brake systems, both
Okay.
for wagons as well as for coaches. We have very good global partners, companies like
Right.
Daco,
So
which are,
Vivek, sorry to
yeah.
come in. Just so you're going to be raising money for the capex plans that you have. So could you tell us how much of money are you looking to raise? Point number one, and what is the ballpark capex plan that you have? We get both those two numbers.
Okay. So we are looking to raise anything close to between 500 to 600 crores. That's what our target is. And our capex ballpark plan over the next year or 2 years is about close to 1,000 odd crores of new capex, which we are planning to do over the various verticals which we have. We have about 7-8 verticals. So spread
Right.
across the vertical is about 1,000 crores of new capex which we have planned.
Right. Got that, Vivek. So yeah, all these, right, the wagon business is the core business for you. You've got this JV, I think you've got 2 JVs for brake systems and railway crossings. Then you've got, I think, a tie-up with RITES on the export front. You have some EV plants in the light commercial vehicle segment. So there are too many things. So which is will wagons be the predominant business for you, or in a way, do you have the right to win in any of the other segments as well? Just wanted to understand.
So yeah, so currently wagon definitely will be the predominant business, but I think going forward over the next year or 2 years, you will see the brake business being a critical driver to the growth. I think next year we should be doing a business of close to 1,000 odd crores on a brake side of our business. And there, as I've been consistently saying that because it's a more technology-oriented business, so the margins are also better. So that impact you will see on the core business also. Plus, I think EV is something which we are very excited about. We are launching our first commercial vehicle by beginning of next year. There we see a very good opportunity. Our focus is again on the last mile and the middle mile. So initially we are launching a vehicle with a 1-ton payload, and we want to take it up to all the way up to a 5-ton payload vehicle.
Okay, just a couple of questions. There are some concerns that investors have, and I'll address. I would like you to address it one by one. The promoter holding has come down. Earlier, I think in March, it was about 75%. Now it's come down to about 72.3%. What is the rationale behind it, and any further dilution in store?
So I think 72% itself is a very healthy promoter holding. So till about 2 years back, most of the growth happened aided organically through the cash flows which the company has. But now we see a lot of opportunity in the sector, and there's a lot of tailwind. and the government is also very focused on this sector. So we want to encash on that opportunity. So
So
you know
you're not looking to
the
bring it down anytime any further, right? I mean, it will stand at this level?
No, because in the current round of fundraising which we are going to do, there will be some dilution, but it will not be very substantial.
How
But
much would
post
it
that,
be?
I don't think I wouldn't know the exact number, but it'll be, I think, close to about 3 to 4% maximum. So
Vivek,
beyond that, yeah.
yeah. So basically, you're happy with your holding coming down maximum to around 68 to 69%. It won't fall below that.
Yeah. I don't think anything it'll go, around 68% is what we are looking at.
Yeah.
Beyond, below that, I don't think and
Vivek,
if you look at our peers in the sector, our promoter holding is much, much healthier than that.
Vivek, during this conversation, numerous times you mentioned what a big opportunity is. That's why Sonia asked you, why did you even sell that 2%? A promoter would like to hold a larger chunk, right? But we get that rationale. Maybe taking some money off the table, there is going to be some dilution. So 68% we're okay with. But you also mentioned
because
something
see, the whole
cash.
idea is to grow the pie. So
Got it.
it's when there's a
We take your clarification.
Yeah.
We take your clarification, Vivek. But what else has come to notice is your revenues has gone up very, very well. EBITDA number as well has gone up. But what the street tracks is cash flows from operations. That's not gone up proportionately. Are there plans to improve that from year on? Because that's a key matrix that we look at.
So, honestly, see, again, our business is a very cash flow generating business. So, but when the revenues go up substantially, what happens is that, you get, there's a lot of commitment towards the working capital. And that's what we are seeing, because we have been adding, quarter on quarter, we have been adding substantial order books. So I think that will continue for in the next 2-3 quarters. But slowly now you will see that the cash flows are definitely improving, and I would say our cash flows are pretty healthy because our inventory levels, so our debtor levels are less than 1 month, and our inventory is also not. It's about a 3 to 4 month kind of an inventory cycle which we maintain.
But Vivek, your net debt has also gone up. I mean, if you map the last 4 years, right, there has been a substantial rise in debt as well. Is there more in store?
So if you look at the debt numbers, there's no long-term debt. So we are a long-term debt-free company. It's mainly towards working capital. And I think it's commensurate with if you see the revenue growth, and if you look at the debt comparatively, again, the growth rate in the debt is much lower than the revenue numbers, the pace at which we are growing. And, and that is again due to the strong cash flows which we generate in the business.
Vivek, let's wrap this up on a more sort of growth aspect. So what are we? You said the brakes business will start to do well. It will generate 1,000 crores of revenues. You said next year, right? FY25.
Yes, that's what we are looking at.
So what is the what kind of numbers are you will you look at? I think you did about almost 2,100 crores on top line in FY23. What will be the number for F5? Let's talk about FY25. I mean, ballpark, given everything you're doing. Yeah.
So honestly, we generally don't give any forward-looking numbers. But as I've told you last year, if you look at the 2,100 revenue numbers, there on an average we supplied about close to 450 odd rail cars, which again, as I've told you, our target is to go to about close to 700 odd numbers. Again, we are adding new revenues from our brake business. Our other businesses also, the container business which we are in, that is also showing a lot of healthy growth. We are
can the number can I mean, again, ballpark. I mean, if you can help us, Vivek, what are we looking at? At least a doubling?
Yeah, so something in those lines, definitely something in those lines is what we are targeting.
So at least a doubling of revenues by FY25. Because you said that margins in the brake business are better than the regular. So there should be some improvement. Got that.
Vivek, just one more question. Your revenues are going to move up. The cash flows, as you promised, that's going to move up as well. Just a final couple of questions from my end. Normally investors like when the management, as their performance improves, they give out dividend as well. Last year you gave out a small dividend. Will you all be putting a dividend policy in place? Point number one. And since you're looking to raise 500 to 600 crores, who are you going to give that money to? Do you have investor interest?
We have just announced our plans to raise money. So that is a work in progress in terms of, we do have a lot of investor interest, which is there. So, but as I've told you, we've just announced, so we will work towards that. In terms of dividend, definitely the idea is that we are going to be very consistent with it. And we are definitely working on something like that. So ultimately, our whole idea is that we need to continuously reward our shareholders who have been with the company.
Sure. All right. Well, thanks a lot for addressing all the concerns that investors had, as well as the potential, growth in the business. Appreciate your time here on CNBC TV18. Well, the TV18 editorial team does not engage in speculative or active trading in stock markets and follows its code of conduct on securities trading and investment. Any investor, viewer is advised to carry out your own necessary diligence or through a certified registered financial advisor for any investment decisions that you would have to make. But let's get back to the markets now and talk about what's happening on the index. The mid-cap index actually doing better than the frontliners, as has been the case for a while. Mitesh Thakkar is joining in now to help us with some trades. Mitesh, what is looking good on the charts right now? And what about the headline index? How's that looking?
I think the headline index, is being contracting, so you will get this volatile dips and rallies. But I think 19,450, I think a lot of people have watched that level as an important pivot. I think that could be the target for the day or two. And we should be slightly mildly positively biased given the fact that the Bank Nifty is showing good traction on the intraday chart. So I think if the Bank Nifty manages to get past 44,450, expect 44,800 to about 45,000 on the Bank Nifty as well. So I think it will be mildly positively biased. On the stock side, I have one buy and one sell. Atul Limited, that's not the Atul auto stock, the other one. Atul Limited, that's a buy with a stop below 71.80 for targets of 73.50. And the oil refining companies is something, which I've been slightly negative about. We had said on IOC earlier. HPCL is now breaking down. So that's a sell with a stop at 260 for targets of 244.
Okay, all right. Mitesh, thanks very much. Great speaking with you, and we'll have you back soon again. Well, let's just take a quick look at the market. We've got, 40 points on the index, 19,384 where we stand. V-Mart Retail is the next company that we are talking about. The stock is down over 30% from its 52-week high. To discuss the demand environment, how it is impacting competition, impacted by rising competition, we have Mr. Lalit Agarwal, founder and managing director at V-Mart Retail, joining in now. Sir, the conversation, Mr. Agarwal, good morning, Prashant here, that's not changed because some of the factors are still there, right? Top of mind is competition from players like Reliance. But it's not just Reliance now. Tatas have gotten into the low value fashion kind of segment in a large way. At least there are large plans. So that is one. I want you to sort of talk about that. Has that intensified? There are other players, more players getting into your segment as well. So let's just start with that. And then I want to talk about the underlying kind of demand conditions. Monsoon has been deficient in many parts of the countries. I don't know, in areas that you operate in, the big markets for you in the north, are those kind of also seeing that, and what is the impact of that? Go on, sir.
Good morning. Certainly, India is promising, Bharat is promising. So people are getting aware that the consumption is bound to increase. People are more aspirational. People want to consume. So more and more retailers and more products are getting lined up for the consumers of Bharat, and that's something which should have happened, and it is happening now. So I think this is a good news, and it's good news because the market is such a large market, and there's so much to do, and everyone can come in with their kind of proposition, and because there are so many personas that the customers have, and with different personas you need different kind of value, because value is something which is the most important. Most of the global companies in the world are largely value driven companies and value fashion companies. So I think value fashion is something which is definitely bound to do very well in India. And that is what is being seen by a lot of other industries and retailers and then conglomerates. So, and which is getting accepted, whether it is Reliance or Tata, and they're finding it very interesting. They have taken up a particular niche segment, especially Tata has got into a new format, which is bringing in a new what I call urban youth mindset people who want to consume a particular kind of product lines at value, and that's what is happening. So I think the marketing is becoming very, very interesting in value fashion space, and that is definitely making more excitement and creating more consumption. Because normally fashion is viral, and then more and more people consume fashion, more and more people want to buy more fashion and look pretty better. So I think that's happening, and I know these are difficult times in the market where you have more store coming in, more players walking in. At times, it takes little bit of time to increase the consumer base, but there is also a large transition which is happening from the mom and pop and unorganized to also organized, which is also being seen. So I think largely we believe the market is going to become better. There are a lot of players who are going to experiment and try and expand a little more aggressively. We'll see a lot of things happening, and we have seen a lot of things which has happened in the past 1 decade. So I think it is definitely going to be better. Market has been quite okay. Monsoon is definitely a very, very important fundamental for the consumption, especially rural consumption, we say. And largely our rural consumptions are dependent upon monsoon and agri income. So
Got it.
There is definitely a bad news or not a very good news in these 2 months or 1.5 months.
Mr. Agarwal, got it. I understood the demand situation is not as bad as perhaps what it was earlier. But just wanted to quickly address the Aeroflex listing. It just happened, I think, a while back, and it's not a great listing. I mean, 65% higher, on day one. I think it's listed at about 176 rupees now, 180 rupees on Aeroflex. And that's a strong listing that we've seen. It's into, manufacturing of braided hoses, solar hoses, basically hoses, vacuum hoses, etc. So, and the company has spoken about very strong growth that they're looking at. It's metallic, flexible, products that they're looking at in terms of manufacturing. So, good opening for that particular counter. But Mr. Agarwal, I agree the demand has picked up. But can you give us the exact number on what the same-store sales growth would look like? Because in the quarter gone by, the growth was not that great. And, for the full year, what are you looking at, FY24?
So we are expecting some growth to come in this particular year from a like-for-like level. And then we will see some growth. But as of now, in this first half, it has been a little dull and a little more flattish kind of approach. But yeah, in the second half, because largely the festivals are getting shifted to the third quarter largely, and we will see a very good quarter three, and that's what we are expecting. And I think even the consumption is going to bounce back. So we'll see some positive low single-digit like-for-like same-store sales growth.
Okay, low single-digit growth for the full year is what you're saying?
Yeah.
Okay, so low single-digit same-store sales growth. Got that. Can you give us an outlook on your margins as well? There's been a steep fall in margins. Is it because of competition, pricing pressure? I think you're sitting on almost 13% margins now, and you used to enjoy 20% margins earlier. Is there more margin pressure that you're looking at? And if yes, what could the ballpark range be?
No, I think we are very comfortable on the margin. That's the margin that we focus on. Largely, our margin also getting impacted because of our 2 acquisitions that we did, an Unlimited acquisition in Southern India, which is not giving the similar margin, and then the online acquisition of LimeRoad, where we have to invest money and which is not creating positive EBITDA right now. So there is a little bit of pressure on those front, but on the main V-Mart business, I think we are getting a good margin, and there will be some pressure because the cost of the raw material had gone up. It has not gone down too much, but the consumers don't want to pay too high, and because of the competition as well, you need to keep your prices very sharp. So there will be some pressure on the margin, but I can't give you a forward figure on the margin. But yeah, we'll be averaging as per the last year.
Got it. Mr. Agarwal, when we speak with investors, and there are some marquee investors in your company, the general sentiment is it's a great company, very well run, but finds itself in a tough kind of operating environment it has for the last couple of years. Will you have to do something different? I mean, innovate or do something different, or you think, one investor should get used to these kind of growth rates?
No, I think we should expect, and definitely our economy also and our consumption also has got impact. Apart from the competition which has come in, So I think these are transition moments, and these are also transitioning moment for our Indian economy from informal economy to a formal economy. So there's a lot of loss. I mean, customers are getting into also a swing, and our self-employed people are also getting into a different kind of income environment. So there's a lot of change happening in the Indian economy, and plus I think this is definitely going to come back, and the consumption is going to grow. We are going to grow by almost 15-16% in this particular year at a total level. So we are not looking at a low growth. We definitely want to increase it further, but yeah, it will take some time because of the economic situation. But I don't think the investors should be worried, or the ground is not good. The consumption, the kind of 5 trillion economy that our Prime Minister is speaking of, we are anticipating a very good consumption growth, which is going to come in. And as soon as the GDP or the per capita income grows for the consumer of our segment, it is definitely going to lead into more consumption of fashion.
Got it. We'll leave it there, Mr. Agarwal. Good luck, and it's always great hearing from you, sir. Appreciate it very much here on CNBC TV18. Well, that's VMart, which is up about 1/3%. The market, by the way, is up about 26 points. 19,373 is where we are. You know, I was highlighting Supreme Industries when we started, and I was it was up 5%. It's flat now. It's about 0.25%, so absolutely unchanged. From getting to almost 4,700, it's climbed back to about little over 4,400. Just wanted to highlight that. We'll take a quick commercial break here. We focus on commodities with Manisha, who comes up next. Stay with us.
Okay, welcome back. Sources have told CNBC-TV18 that SEBI is in an advanced stage of investigation in the Axis Bank Max Life deal, and SEBI is also examining valuation discrepancy in the transactions. Yash joins in with more details on all of this. Yash, what are you picking up?
Well, Sonia, the transaction that you spoke about, under that Axis Bank, picks up about 19% stake in Max Life Insurance. When the first tranche of this transaction was executed, that was about 12.99%. IRDAI, which is the insurance regulator, had penalized both entities for two things. One is for a discrepancy in the pricing of the deal, and the second one was with respect to entities making undue gains out of this particular transaction. What we've been given to understand is that market regulator SEBI is also investigating in the matter. In fact, SEBI is at a very advanced stage of its investigation when it comes to this particular transaction. The action from market regulator SEBI is expected to soon. This is what we've been given to understand from our sources. And the charges that market regulator SEBI is looking into is of course, loss to public shareholders because of the valuation deficit which was arrived at for the first tranche of the transaction. SEBI believes that there could be a loss of shareholder value through this particular transaction which happened. And the second part is about the valuation differential or the valuation discrepancy itself. Now, just to help you understand what exactly is this discrepancy in the valuation, the first 12% of the transaction where Axis Bank acquired that stake in Max Life was done at an average of about 32 rupees per share. After the penalty which came from the insurance regulator, the next tranche, which was about 6%, for that the pricing was revised to about 113 rupees per share. Now, if one is to assume that 113 is the fair market value, then as per that, in the first tranche of the transaction, there was a loss of shareholder value to the tune of about 1800 crore, which was derived from this particular transaction. Market regulator SEBI is investigating exactly that, where we've been given to understand that there could be some action from SEBI. We've written to all three parties involved in this particular transaction, Axis Bank, Max Life, as well as the investigating agency, that is SEBI in this particular case. We are still awaiting a response from all these three entities.
All right, Yash, thank you very much for that. Just to clarify, that number 1800 crores, that is as per CNBC-TV18 calculation, and that is not something which we've learned from sources or from any of the other parties. That is a simple calculation which Yash has done with regards to the difference at which the first tranche was done at, which was 32 rupees, and the next one, which was over 130 rupees per share. All right, let's talk about commodities now. Manisha is standing by with what is top of mind. Manisha, morning.
Thank you for that, Prashant. Well, almost every segment in commodities seem to be doing quite well. It is about the international market. So you have precious metals, industrial metals, energy markets, all trading in the positive. But I'm focusing on the industrial metals because we've seen 1 to 3% of gains in the overnight markets across sector, whether it has been ferrous or non-ferrous metals. The markets are looking at stronger demand going forward because September to October are traditionally strong demand months in China and much of Asia. So the demand is expected to pick up. We already have seen the discounts turn into premiums for some of these commodities, and that has been supportive. It also is about the weak US economic data that has supported a no rate hike picture. So that is what the street is reacting to. And then from China as well, while we have seen weak economic data continue, but China has been putting out measures, small even and far and few, but even then it has been coming in. Now the PMI has contracted for the month of August, but it is better than the previous month and it is better than the street expectation, and that in turn also seems to be supporting many of these commodities. When you look at the Chinese yuan as well, it has rebounded. The euro is trading at a 2-week highs. So we have seen the dollar decline and many of these other high-yielding currencies do well, and that has supported. Steel is trading at a 3-week highs right now. You have iron ore prices trading at a 1-month highs. And when you look at the non-ferrous metals, we have seen similar gains come in here as well, where copper is trading at a 2-week highs, aluminum at a week highs as well. The street will now be watching out for the US non-farm payroll data that comes in on Friday, and that would give you further direction.
Manisha, thanks a lot for that. Let's slip into a quick break. On the other side, our special segment, It's the Economy. Lata will connect with Upasana Bharadwaj, the Chief Economist at Kotak Mahindra Bank, and Kaushik Das, the Chief Economist at Deutsche Bank, to discuss the key expectations from the first quarter GDP numbers, which will be announced today. Stay tuned.
Welcome to It's the Economy. The first quarter GDP numbers will be announced today, and the CNBC-TV18 poll shows that the number may come in at 7.9%. Reserve Bank's forecast is 8% growth. Now, 8% is a great number, but even with 8%, the aggregate GDP output, the output number, works out to 40.4 lakh crore. And 40.4 lakh crore is a good 7% lower than the output in Q4 GDP, Jan, Feb, March. That was like about 43 lakh crore. So is 8% a weak number, or will we be surprised on the upside? What should we concentrate on when we get, the jungle of numbers along with the GDP? To help us understand the GDP numbers, I have with me two economists, Upasana Bharadwaj, Chief Economist at Kotak Mahindra Bank, and Kaushik Das, Chief Economist at Deutsche Bank. Kaushik, Upasana, thank you very much for joining me. Let me start with you, Kaushik. This is a little confusing. 8% looks very good. And yet, when you compare it to Q4, it is so much lower. Pre-COVID, Q1 is always lower than Q4 because it's monsoon months. But it is never so much lower. Why are all of you going with such a lower number for Q1?
So, Lata, first of all, I should mention that India's economy has been significantly more resilient than what people would have thought. 3 to 6 months before, when we were forecasting April-June, consensus had a number of about 7% for April-June GDP growth, even lower than what you are mentioning today. And it was only RBI who stuck their neck out and put a number of 7.8, and now they've made it to 8%. And finally, we are also forecasting 8% growth for April-June. Now, there are a lot of technicalities involved, as you pointed out. One is obviously 8%, from a sequential basis from January-March would be still lower, because January-March normally is a quarter when you have all the, fiscal year ending, and it's normally supposed to be on the higher side. And therefore, there is a seasonality that April-June is normally lower than January-March. But it could be possible that we could get an upside surprise from 8% also. And partly that could be due to the fact that the GDP deflator in April-June, which is calculated using WPI and CPI inflation, that could be very low, or in fact be negative, because WPI inflation was minus 2.8% average in April-June. So just to answer your question, I think 8% could be, a good number, but it could, you could have a positive surprise higher than 8% as well. And, probably that will kind of show that the resiliency is still there in the economy. But after that, you could expect a slowdown.
There is in the poll one number which was also 9%. But even if I take 9%, Q4 is so much better, or rather Q1 is still pretty lower, about a good 5 lakh crore lower than Q4. If I went pre-COVID, 2018, we don't see such a big difference. So Upasana Bharadwaj, to you, I have read your GDP report as well, and you are actually a little more pessimistic. You are on the lower side, 7.5 if I'm not mistaken. You explain to us, Upasana, why are we not at pre-COVID levels of Q1 over Q4?
Lata, while we have been seeing a lot of recovery happening over a period of time, last quite a few quarters that we have been tracking, but the fact is it's a very patchy recovery. We still have quite a few, especially I would say within the industrial sector, we still have almost about 55% of the industry still not having recovered to pre-pandemic levels. So we still have a very patchy recovery. Also, if you look at since the pandemic June quarter-on-quarter numbers, it has been improving over a period of time. So the negativity has been coming down. So this quarter, compared to the last 2-3 quarters, if we look at June quarters, that is, quarter-on-quarter, obviously the pace of contraction is coming down. It will improve going ahead. So we will eventually reach to pre-pandemic, but we are still not there. Especially, like I said, because few sectors are still not recovered. They haven't yet recovered to pre-pandemic levels. And that is going to be dragging down growth. And that is the very reason why, specifically on industry, we are a little more pessimistic compared to, I think, industry consensus that you have got. We are services and agriculture, we still remain hopeful because we have seen the indicators suggestive of that for the first quarter. But I think manufacturing is where we still remain a little more pessimistic.
Okay. Kaushik, help us understand what are the big numbers we should watch out for. To my understanding, it is trade, hotels, transport and communication. That is the biggest weight for, those of you who don't care so much about GDP. That number, trade, hotels, transport and communication and broadcasting, is the weightiest sector, services sector. But you tell us, what would you watch out for, Kaushik?
So from the GBA side, Lata, we can watch out. One is the manufacturing sector. We know that that is reflecting how the corporate sector profitability has been for the quarter. And we have seen that January-March corporate sector profitability improved and manufacturing sector growth was also pretty high. Similar thing will happen in April-June. Given that input prices had fallen in April-June, you'd have expected corporate sector profitability to have done well. So manufacturing sector should have done well. So that is one thing to look out. IIP is not necessarily reflecting properly the move in the manufacturing sector GBA. It's the corporate sector profitability. So that's something to look out for. Agriculture has been very resilient last quarter also. This quarter, we are taking a little lower number at 3% growth, but that will still be in line with trend. So nothing, unless it's a big surprise downside or upside, it should be around 3%. Services sector is going to be the big support for growth. As you mentioned, trade, hotels, transport could be 10-12%. Construction has been very good in the previous quarter, could slow down a bit this quarter because of rainfall, but that is also something to look out for. I guess then we have to look at the GDP side. Private consumption is something which I'll give a lot of importance to. If you remember that we got 2.8% growth in the previous quarter and October-December was just 2.2%. And private consumption is close to 60% of GDP. The one thing which is not tying up, and we discussed this in your last GDP show also, where Dr. Sen was there, is that if your services sector is doing so well, why is private consumption expenditure growth at just 2.8% or below 3%? Shouldn't it be higher? Or will there be a revision as we go forward into the GDP data where you'll see private consumption being increased? The other thing is the investment part, which has been very strong. And, we grew at about 10% in the previous quarter. So that should be also pretty strong in this quarter. So all taken together, you should get around 8% real GDP growth this time. Nominal GDP growth could be lower because of the, deflator issue. And it's a complete technical issue. And April-June is this quarter where a lot of distortions happened starting from April-June 2020. If you remember last quarter, April-June, the forecast was about 16% for that quarter, and we ended up getting 13% growth. So the base is also relatively favorable for getting a 8% growth in this quarter. But there are a lot of technicalities involved. We'll analyze that when we get the data. Also, the perennial
just one number. Yeah, just one number from you. What is your nominal? Okay, I got that. What is your nominal GDP number, Kaushik?
It's about 8 to 9%. We have taken it positive, but there is a possibility that it could be lower than the real GDP also, which has happened from time to time when GDP deflator has been lower.
Fair enough, fair enough. Upasana, your thoughts. Tell us which is the most, say, 3 most important numbers.
Oh, absolutely. I think trade hotels is going to be the key. We're looking at about 12% plus number growth in the trade hotels component. Agriculture is about 5.4, 5.5% that we're looking at. The Rabi production was very good previous quarter, so that impact is going to be witnessed in this quarter. So I think we will be seeing a reasonably good agricultural output this time. And of course, like Kaushik said, I think consumption is where I remain worried. It's, again, a patchy segment. And we have been seeing sub 3% Y&Y growths in the previous 2 quarters as well. And I think private consumption is where I'll be watchful about, because that is exactly where the indicators are also suggestive that there is some kind of fatigue in the rural demand. Urban is still about holding up, but I think we are still to see. If we look at the industrial production data as well, within that as well, the consumer segment still has not recovered entirely to the pre-pandemic levels. So, there is distortion clearly, and it is getting witnessed in the previous 2 quarters GDP numbers as well. So private consumption will be key, apart from, of course, investment that we will have to look at.
Yeah, actually, I didn't get too many people giving me forecasts of private final consumption expenditure. Just for those who don't, again, follow it, what everyone looks at is the output side. There is an expenditure side to the GDP. How was it spent? Was it spent on government expenditure, or was it spent on private consumption? Was it spent on, investment? That part, I have not got too many observations, but private final consumption expenditure, the average of 2 that I got works out to about 7.5%, 7.6%, which would be much better than the 2.8% that you're referring to, Kaushik, in Q4. What's your sense? Do you think consumption has improved if you looked at lead indicators? I mean, electricity and auto sales, consumer durables. Does it look like we did well on consumption in Q1?
So yeah, we should get 6.5%, 7% if you have to get headline, GDP at 8%. Mathematically, you have to get 6.5%, and investment growth has to be close to 10%. So that both of them will support a real GDP growth of about 8%. Now, consumption, the worry is that RBI has hiked interest rates quite aggressively over the last year, and there is a lagged impact of all these interest rate hikes on consumption. Inflation has also moved up on related to food prices. So whether consumption kind of holds, even if you get a 6.5%, 7%, particularly that is because of the favorable base as well as the deflator issue. But I would be concerned going forward on private consumption because RBI will keep rates higher for longer, and there is a risk that RBI could hike rates also if inflation remains high. So private consumption is something we need to be worried about, and that is why we think maybe next year, starting from April-June quarter, RBI will start cutting rates to support growth when you see that slowdown in private consumption beyond the April-June quarter.
Okay. I know there is a lot of numbers and a lot of issues at stake. After all, GDP is a very large number. Upasana, Kaushik, that's all I have time for. But I think you'll have put some very important points on the table. What are the numbers you'll watch out for? We have to watch out for private final consumption expenditure. Is it growing? And even if it does very well, economists will be skeptical about how it does in subsequent quarters, because not only is the Reserve Bank raised rates, it is also tightening liquidity. They're extremely worried about inflation. So we could see that going down. The Reserve Bank's full year growth stands at 6.5%. The average I got was 6.3%. And many of them are way below that 6.3% mark as well. It will be interesting to see that if this number, today's number, comes in well over 8%, will everyone revise up or will they not revise? Because you are worried that both government may go away from capex to revenue expenditure ahead of the elections. We already saw one example of fuel price cuts. And secondly, whether the Reserve Bank's tightening is going to slow down